Hello friends, in our session on accounting cycle we'd explain that some companies prefer to record transaction in a journal book whereas some others prefer to divide the journal book into sub-journals or say subsidiary books. So why do you think some companies would prefer to prepare sub-journals? Why not make a journal? Let's learn through an example. Suppose there are two businessmen, say trader A and trader B. Now trader A has a small business and he has only 20 to 30 different transactions in a month. But trader B has a big company and they have around 50 to 100 transactions just in a day. Now these traders have already collected their source documents and they have also finished recording them in a journal. So let's see the journal book. Now trader A's transaction in a journal book occupies hardly a few pages. But trader B's journal was very time consuming to go through as it occupied almost the entire book. So if we see here, both the traders have prepared their journals. But suppose if they need to find any particular transaction, like know on what date they purchase goods from supplier on credit, what will happen? For trader A, it will be quite easy to locate the transaction. But it might take hours or days to find it in a journal of trader B. And just imagine how tedious it will be for trader B to even record these entries with their narrations each day. And if there is so much of clerical work, there is more possibility for errors. And this again will be difficult to find and rectify later on. That is like a vicious cycle of problems. This is when subsidiary books comes as a rescue to all the large business concerns. Subsidiary means subdivision of a journal or preparing sub-journals. When we say sub-journal, it means books that are supplementary or subordinates to a journal. What does that mean? Like when we see B trader's journal, we see there is innumerous cash transactions in a day. So he could rather prepare one sub-journal or subsidiary book for all cash transactions and another for all miscellaneous transactions, or he could also prepare a subsidiary book for purchases and for sales as well. He can also divide his clerical work and save a lot of time if recording is done in different subsidiary books simultaneously by different people. And this may also reduce errors as they will be more focused on one particular book. And it also will increase the efficiency of preparing books. So the subsidiary book just for a cash transaction is called a cash book. One specially prepared for purchases is a purchase book, and others are sales book, bills receivable and bills payable book, which records all the details of documents showing the amounts payable or receivable by business concerns. And the book where all other miscellaneous or remaining entries are posted is called as journal proper, which has the same format of a journal. Don't worry, we will learn about each of this book in detail in our further sessions. This is how the format for most subsidiary books is like. This is a format of purchase book. It is a specialized category of transactions. You can see there is also a reference column for its source document. So in case there is any mistake or we need to go into the roots of a specific transaction, we can trace back the source document for it. You can trace one more thing is if we can notice we have to give narration to the each entry in the journal book, right? but that much work will also get reduced when we prepare subsidiary book. After preparing subsidiary books, then the next step is preparing ledgers, right? So when we post each and every entry from journal to ledger, the ledger book also becomes bulky. So if we see here, B's journal has 70 transactions just in a day. So while posting it into the ledger, he has to make 140 entries in total to give 2 effects of each entry, which results in more mistakes and errors, correct? But if he prepares subsidiary books, then these 70 transactions will get divided in different books. So while posting them into the ledger, we only post 1 entry for each transaction, as we have already given 1 effect in subsidiary book except for journal proper. So total will be approximately 80 to 85 entries. So here you can see the burden of number of entries reduces to a reasonable extent if we prepare subsidiary books. So when we transfer entries from subsidiary book to the ledger, we don't have to post each and every entry. We only transfer final balances in most cases. That is why it reduces errors as well as saves recording time. So all the benefits we discuss in this session today is why most companies prefer to keep subsidiary books instead of a journal. That's all for today. Hope you all have understood this concept. We will be dealing with each of this book in detail in our upcoming sessions. If you like this session, hit the like button, and if you have any queries, share it on comment box given below. For more updates, subscribe to our channel Letstute Accountancy. Till then, keep watching, keep learning. Thank you.